If you're a coastal retiree from California or Washington, there's a number you need to know. For Californians, it's the capital gains on your home sale. For Washingtonians, it's the $3 million and what just happened to it. The 2026 tax changes in Washington just made the math of moving to Idaho bigger than it's been in 20 years. Californians already have the highest income tax bracket in the country. Today, I'm walking through 7 specific cost differences between staying in California or Washington and moving to North Idaho. Plus, a bonus number 8 at the end that hits the wealthier retirees the hardest, the one that costs your heirs the most. And let's get after it right now. Hey, I'm a local real estate agent. I'm not a CPA. I'm not a tax attorney. None of this is tax advice, just my opinion and information that I have found and gleaned over 20 years of in the real estate business. I've helped a lot of Californians and Washington retirees do this move, and I've watched what happens to the math. So make sure you talk to your CPA so you don't make $1 million decision based on a YouTube video. So here's what I've seen. Count down from 7 to 1 plus the bonus. Number 7 are vehicle registration and DMV fees. Vehicle registration, that's the easiest one to verify. California vehicle registration, often $400 to $900 a year per vehicle. Washington vehicle registration recently climbed with new fees and surcharges, often $100 to start and up to several $100s per vehicle based on weight type. And if you have an EV, you just added on an additional $150 fee. Idaho vehicle registration, we're around that $45 to $100 per vehicle for a passenger car. Add the recent Washington 8% luxury auto tax on top of any portion of vehicle over $100,000, and things get interesting. A couple with 2 cars save roughly around $300 and up a year in Idaho just on registration. Vehicle registration is the easiest one to predict. Number 1 is the one that involves the single biggest financial decision of the entire move. Number 6, our day-to-day cost of living. So let's talk about what happens day to day. We've got sales tax. California, you're at 7.25 statewide before the local add-ons. Washington, you're 6.5% state, but 9 to 10.5 with the local add-ons. Idaho, 6%. Gas tax, California, over 60 cents a gallon. Washington, 49 cents a gallon. Average gas price today in Spokane, Washington is $5.14 a gallon. Idaho, we're $3.30 a gallon. Average gas price in North Idaho is hovering around that $3.50 to $3.80 a gallon right now. Groceries, roughly comparable across the 3 states, lower in some of the rural areas. Restaurants and services, often 15 to 20% to 25% cheaper here than equivalent locations in California or Washington. Annual savings for a typical retired couple on a day-to-day spending, $1,500 to $3,500 a year. The savings start small, they get bigger. Number 5, let's talk about auto insurance, is where a lot of the numbers start to matter. Our auto insurance, California is one of the most expensive auto insurance states in the country. Average California full coverage premium, $2,400 to $3,200 a year per vehicle. Washington average, $1,400 to $2,000 a year per vehicle. Idaho average, $900 to $1,400 per year per vehicle. A two-vehicle retiree from California saves roughly $2,500 to $3,500 a year. A two-vehicle retiree from Washington saves roughly $1,000 to $1,500 a year. Hey, a client of mine from Sacramento, two cars, paid $5,800 a year in California. Same two cars, same driver, same coverage in Idaho, $1,950. Annual savings, $3,850. Auto insurance is a clean win. Number 4 is where the math actually surprised people. Wait for it, home insurance. The bombshell. Number 4 is our home insurance. This one's going to surprise you, especially if you're moving here to escape the California insurance crisis. California, the insurance crisis is real. Carriers pulling out, renewals climbing, new defensible space requirements. Washington insurance has been climbing too, but still more stable than California. North Idaho, wildfire risk has carriers tightening underwriting here also. Renewals climbing 30 to 60% year over year in certain zip codes and in certain areas, most of the really rural areas that are out in those forested areas. Some carriers are pulling out of moderate fire risk zones entirely. Roof age matters, defensible space matters, distance from a fire station matters. We can help you with all of that. For some buyers, Idaho home insurance is actually higher than what they were paying in Washington. For Californians, Idaho insurance is still typically lower, but the gap feels like it's closing. A client of mine moved up from Seattle, insured a 1990 built home in a wooden area east of Coeur d'Alene. Washington premium was $1,650 a year. Idaho premium, $3,200 a year. So sometimes the move you make to escape the insurance crisis lands you in a new one. So we'll want to ask questions. We'll want to verify the home type and get those quotes up front. Number 3 is where the income tax gets real. And Washington, listen up. This year, the math is changing. If you made it this far in the video, you're not just curious, you're doing the math. So here's what's coming. Number 3, state income tax. And what just happened in Washington that nobody is talking about. Number 2, the Washington estate tax that just got frozen at $3 million. The single biggest financial reason for affluent Washington retirees to consider this move before they die. And number 1, the home sale itself, where most people leave most money on the table. Let's keep going. Number 3, let's talk about state income tax. State income tax, California top income tax bracket, 13.3%, the highest in the country. Even at moderate retirement income levels, $150,000 to $200,000 a year, you're hitting 9.3%. California doesn't tax Social Security, but it taxes most other retirement income heavily. Idaho, 5.8%, fully exempts Social Security, dramatically lower. For a California retiree drawing $120,000 a year in pension plus 401k distributions, Idaho saves them $4,000 to $7,000 a year every year. Now, Washington, listen carefully. Washington has historically had 0 state income tax. One of 9 states with no income tax in the entire country. In March of this year, 2026, Washington enacted Senate Bill 6346, the Millionaire's tax. 9.9% state income tax on adjusted gross income exceeding $1 million. Applies to both residents and non-residents with Washington-sourced income. Effective January 1st, 2028, first returns due April 2029. For most retirees, they're not hitting that $1 million in adjusted gross income in a normal year. But if you are rolling over a 401k, selling a business, liquidating an investment portfolio, taking a large IRA distribution, you can hit 1 million in a single year easily. And here's the bigger story. This is the first time Washington has crossed the income tax line. The door is now open. It'll be interesting to see what continues to happen. Number 2, the Washington estate tax freeze. This number 2, we talked about that Washington estate tax just got frozen. This is the single biggest financial reason for affluent Washington retirees to consider moving to Idaho. In March of 2026, Washington also passed in Gross Substitute Bill 6347, the estate tax revisions. For descendants dying on or after July 1st, 2026, the estate tax exemption amount is set at $3 million and it's frozen. The legislation reverts to a defunct inflation index, meaning the exemptions no longer keeps pace with inflation. The maximum marginal estate tax rate is 20%. $3 million sounds high. It's not. A paid-off Bellevue or Mercer Island home is often $2 million by itself. Add in a 401k, IRA, brokerage, vehicles, personal property. Most affluent Washington retirees are well over the $3 million in total estate value. And every year, with inflation eating away at that frozen exemption, more retirees get caught. Idaho has 0 state estate tax. Move to Idaho, establish Idaho residency, die as an Idaho resident. Your heirs pay 0 Washington state estate tax. For an estate of $4 million, that's roughly $200,000 of estate tax that doesn't get paid. For an estate of $6 million, that's $400,000 to $500,000 that goes to your kids instead of the Washington State General Fund. Yeah, I had a client. They were still working, but unfortunately, their father was terminally ill. With the new tax laws, they realized a large portion of the estate that the father was leaving would be taxed and they would lose much of it. They moved over here to North Idaho, bought a beautiful property so that the father could enjoy his last days here in a beautiful area. And then they were also able to retain more for all of that inheritance. If you've got real assets in Washington, talk to your CPA, talk to your estate attorney, run the math. Don't watch a YouTube video from some guy that's not a tax guy, but just merely drumming up information while he can research. But also don't ignore this. The bonus plus number 1 is left, and then the bonus, which is what the Puget Sound retirees are really paying every single year, whether they realize it or not. Number 1 is the single biggest one-time financial decision of the move. Here it is. Number 1, selling your high equity coastal home. Number 1 is selling that high equity coastal home is the single biggest financial decision of this entire move. Federal capital gains exclusions on a primary residence sale, $250,000 for single, $500,000 for married couples. If you're in California with a Prop 13 home you bought in 1985 for $200,000, now it's worth $1.8 million, you have a $1.6 million in gain. After the $500,000 exclusion, $1.1 million of taxable gain. Federal long-term capital gains tax, 20%, top rate plus a 3.8% net investment income tax, plus California state tax on the gain. Your total tax liability on the gain, potentially $300,000 to $400,000 or more, depending on income. And you lose Prop 13 protection forever. You can never buy a comparable California home at your prior tax basis. That door is closed. Now, Washington, the Washington capital gains tax, 7%, does not apply to primary residence sale. That's a relief. But Washington does apply the 7% capital gains tax to investment portfolio liquidations over $260,000 in gain. If you're funding your retirement by liquidating a brokerage account along with your home sale, that 7% hits. And if you sell the home in Washington before establishing Idaho residency, you may still be subject to Washington capital gains tax on any investment sales that close in the same tax year. Here's the play. I'm not a tax attorney. I'm not a CPA, an estate attorney, any of that kind of stuff, but establish Idaho residency before you trigger the major capital gains events. Sell your investment portfolio as an Idaho resident, not a Washington resident. Timing matters, order matters. Talk to your CPA. Plan the move 12 to 18 months out. Done right, this is a $50,000 to $200,000 swing. Bonus. Number 8, the property tax surge bonus. Let's talk about the thing Puget Sound retirees are paying every year that they may not realize is climbing. Washington state law caps property tax revenue growth at 1% per year per taxing districts. But that cap does not apply to assessed property value. King, Snohomish, Pierce, Kitsap counties, assessed values have climbed dramatically over the past decade. A Bellevue retiree paying $14,000 a year 5 years ago is often paying $18,000 to $22,000 now. Idaho property tax on the comparable single family home typically $4,000 to $7,000 a year and lower with the homeowners exemption. Annual savings for a high equity Washington retiree, $10,000 to $15,000 a year every year. Compounded over a 15-year retirement, that's $150,000, $225,000 just in property tax savings. That stays in your pocket. You can't change Washington's property tax map, but you can decide where to live the next chapter of your life. Okay, a few things before all the comments start coming in. One, again, none of this is tax advice. Talk to your CPA and your estate attorney before you make a move. Run your specific numbers too. The math doesn't work for everyone. A young coastal worker still earning a high income may stay net positive in California and Washington, depending on their career. This video is for the 50, 55 and older, plus relocation decisions, not the working professional. 3, timing and residency rules matter. Establishing Idaho residency takes documentation, driver's license, voter's registration, primary residency change. Don't have to do it right. 4, tax laws can change. The millionaire's tax is facing legal challenges. The estate tax could be revised again. Don't make $1 million decision on tax math that could shift in 2 years. Make it on a lifestyle. Make it on culture and tax math. The next video on this channel, we're going to walk through what actually discovery trip to North Idaho should look like, what to do, who to see, where to stay, what to ask, subscribe so you don't miss it. If you want to talk through your specific move, your timing, your residency strategy, the link is in the description. Send me a note. I'll connect you with the right CPA or an estate attorney here in Idaho if you need one. I'll tell you the truth, even if it costs me a sale. That is the whole point of this channel. We want to be very real with you. Drop me a comment with which one of these 8 hit you the hardest. If you've already made this move, tell me what your CPA told you that I missed or maybe that I got wrong. I read every comment and I'll respond. And if this video saves somebody else from making a 5-figure tax mistake, share it with them. Hey, I'm Reed Wilson with Revealing North Idaho. My team and I, we are never too busy for you. Give us a call, shoot us a text, send us an email. We'd love to talk to you and help make your move to North Idaho a smooth transition. Thanks for watching. We'll see you next week on the next video.